Welcome to Shootin' It Straight with Stan. I'm your host, Stan, the Annuity Man, America's annuity agent licensed in all 50 states and Puerto Rico. Today's topic is a very interesting one, a little bit off topic from the annuity industry, but I get a lot of questions about this. So the title is going to draw you in, but I'll explain it. It's what are life insurance death bonds? And you're thinking, what is that? The Grim Reaper of bonds? Maybe, kinda. Remember, life insurance companies have the big buildings for a reason because they know when we're going to die. Nod your head. They also issue annuities, all annuity types. So life insurance companies issue annuities. Those are contracts between you and the life insurance company. But if you look on cable television at all and you see these ads for, do you own a life insurance policy? You might be sitting on a gold mine, all that stuff. Pretty cool advertising, but what they're talking about are life insurance policies that can be sold. There's also a group out there that buys annuities as well. All right? Annuities in payout form. They'll pay for it. You're going to say, wait a minute. What's the catch, Stan the Annuity Man? So let's talk about the life insurance side. You know, life insurance is the best return on investment you'll never see because you're dead. And by the way, death isn't a good strategy because you can only use it once, right, Zeke? Zeke's behind the camera. He's like, yeah, death isn't a good strategy. No, it's not. But with life insurance, the death benefit passes tax-free and probate-free to the listed beneficiaries of the policies. So you see these things come on TV and they're like, we will buy your life insurance policy. Or you might say, I really don't see why I have a life insurance policy anymore, or I don't want to make these payments, the premium payments annually anymore. How does that work? So what the companies are doing is they're buying the death benefit. They're buying the rights to the death benefit, and they're paying you a fraction of a cash value, but they're running your life expectancy table. So in essence, they're waiting on you to die. They're buying the ownership of that policy and the rights to that tax-free lump sum at your death, but they're going to look at your life expectancy and then give you an amount that's typically fair. A lot of the ones out there are very, very fair. And then you get the cash, and then they're waiting on you to die. You're saying, well, that's morbid. Yeah, that's why I call them death bonds. Really? This is if you had an extra $500 million laying around, it's a great business to go into because it's all about life expectancy. Okay? And so a lot of times people have a terminal illness and they need money, or they just, for whatever reason, they need money from their life insurance policy. They don't need that anymore. They can get that upfront payment in cash, and then that company is going to get the death benefit on the back end tax-free. All right? So I wanted to explain to you how that works. And if you have a life insurance policy out there that you're not using, you can do that. If you have a cash value inside of that policy, you can transfer the cash value to an annuity without any tax consequences. That's called a 1035 exchange. 1035 is the section of the IRS code that says you can transfer annuity to annuity or life insurance cash value to annuity without any tax consequences. You can do that, okay? If you say, well, I'm going to hold on to that cash value because the guy that sold it to me told me that's tax-free income. No. That's a loan. That's not tax-free income. All loans are tax-free. Hello. So don't fall under that trap. But there's also companies out there that will buy your annuity lifetime income stream as well. And they'll either buy it if you bought it, and a lot of times they're called structured settlements that they'll buy as well. And there's what's called secondary market annuities. That used to be a pretty vibrant market, but it's really kind of gone downhill a little bit recently due to some, obviously it's a little bit unregulated. Anytime it's unregulated, there's some issues that's happened. A good friend of mine used to be really big in that, and now he's not, and that's all I need to know, which means that it's not for him. He's got a pretty high moral compass, and if he's checked out, then I trust his moral compass. But a lot of those people that have been in really bad, say, truck accidents or something like that, and the judge hits the gavel and says, you're going to get a lifetime income stream from this AA plus company. A lot of times the people that get that lifetime income stream will come back to the judge and say, I want to sell a portion of that. That's a secondary market annuity, and you're buying that portion. Now, What's interesting about that is in the past few years, there's been some lawsuits from family members that weren't involved in agreeing to selling the portion of those payments that are now suing for those payments back. I guess my whole thing is be careful. As I always say, you can't thread the needle. You can't beat anybody. There's no arbitrage in annuities. I mean, these are contracts. But I did want to explain all these ads that you're seeing. I'm not going to mention the names. I know the owners, and I'm just not going to give them that free publicity. But you've seen the ads where they say, if you have a life insurance policy and you don't need it anymore, we'll buy it from you. That's what they're doing. They'll look at your life expectancy. A lot of them will look at your health records, and then they'll make an offer. It's an active market. If you're in the market for that, you should probably have a couple of these companies bid on your business, and then you're going to get that. You're going to get a lump sum for that life insurance that you no longer own. They own the rights to that death benefit. So those are called life insurance death bonds. But if you have an immediate annuity or annuity and payment, there are some companies that will go in there and buy that from you and buy that lifetime income stream, looking at your life expectancy. Doesn't happen as much in the annuity industry as it does in the life insurance industry. And the reason that I think that's true is, remember, the death benefits from life insurance pass tax-free and probate-free. And you got to be saying, well, wait a minute, Stan. You said that life insurance companies issue annuities. I did. Are the annuity death benefits tax-free? No. So life insurance death benefits tax-free. Life insurance companies issuing annuities, those death benefits are not tax-free. I mean, those are the rules. That's how the game is played. My opinion, you should look at annuities for 4 things, because that's what I do. That acronym's PIL. P stands for principal protection, I stands for income for life, L stands for legacy, and the other L stands for long-term care. And you ask 2 questions to even see if you need an annuity. Number 1, what do you want the money to contractually do? And number 2, when do you want those contractual guarantees to start? From those 2 answers, we can tell you if you need an annuity, and we'll tell you if you don't. And if so, if we think you might, we'll show you the one that will provide the highest contractual guarantee for your situation based on those 2 answers. Everybody in my Las Vegas office is licensed in all 50 states, but none of them are on commission. Okay, their bonus is based on client satisfaction. We're not hammers looking for nails. I mean, we're just doing it different out here. As you can tell, I'm a little different. We do it different out here. But I wanted to cover the life insurance death bonds. I call them death bonds. The people in the business that own these companies go, don't call them that. I didn't come up with that. I remember reading an article. I forgot whether it's in Barron's or it was in Wall Street Journal a while back, and they said, the emergence of death bonds. And I'm like, that's exactly what they are. They're death bonds. The people that buy your death benefit, they're waiting for you to die. Now, there's been, as you can imagine, I just remember this, Zeke, there were some people that did some bad things, and they would buy life insurance policies on homeless people. And then there was questionable deaths, as they would say, until they were caught and they're in prison. But, there's always people trying to push the system. But just remember, annuities and life insurance companies issue annuities. These are assets, and there is a semi-active secondary market for some, not all, annuities out there, but some, not all, life insurance policies, but more life insurance than annuities. All right? Education for the day. Shooting it straight with Stan. My name is Stan, the Annuity Man.